Good afternoon. The time right now in Singapore is exactly 12 noon. The date today is April the 10th and it's Easter Monday for all Christians out there. Wish you guys happy Easter Monday. And we have a shortened week last week because of the Good Friday holidays and the market was pretty quiet. But however, in the SP 500, which is the US equity index, we have a new high for the year at 4,133.13, which is what you can see on the chart here. This is the daily time frame. And you can see from this chart here, the market is actually doing a corrective rebound from the low of 3,808.86 from somewhere in the mid-March. I think this was March 13. So we can see that this rebound is a three-wave correction. Okay, so anything that's three-wave is typically seen as correction. And when you look at the structure of this, it is equality move, although the market falls short of its ideal target at 4,140. So that would be my ideal equality levels, but the market went a high of 4,133. It is almost as good. Now, what is more important is this is a crucial level, technically speaking, and on Tuesday, we have a high of 4,133.13. And why Tuesday? Because Tuesday we have the release of the job openings in the US. And for the first time since the end of the pandemic, we have a number that is actually below 10 million new jobs creation, meaning to say jobs opening available, okay? And this is for the first time went below 10 million. The exact number was 9.9 million. And this is taken to be seen as a deterioration in the confidence of employers in the States in employing, meaning to say the business is bad, demand is not as great, so they don't need as much workers, so the amount of job opening is going to be lesser. Now, this is the first time since the end of the pandemic, like I mentioned, is below 10 million new jobs opening, meaning to say the market right now is getting a little bit worried about a possible recession in the months ahead. And going forward, we should be seeing higher unemployment rate if this number is to be believed. So that is the reason why the market actually went up to a high and then closed back down as a reversal pattern. When you see the two bars structure of this at the creation of the high for the year is 4,133, this is what we consider an outside bar. Outside bar means the entire trading range for that day is beyond the trading range of the prior day, the previous day. It means to say we compare to Monday, okay, and what happens on Tuesday itself, we can see this. The high is actually higher than Monday. The low is lower than Monday. So this is a outside bar. And this is a very bearish setup. Typically, we have a few reversal patterns that we normally will look out for in the candle bar structure here. And this is what we call an outside bar. There are people who call this the bearish engulfing bar, okay? This is also another term used for explaining an outside bar. Of course, the opposite will be inside bar, but now we're talking about outside bar, which is actually very bearish. And when it happened near the critical chart point, as far as I'm concerned, this is an equality move at 4,140 happening near the equality levels. When we see an outside bar, I would like to believe that this signals perhaps the end of this rebound from 3,803. So this is setting up, technically speaking, to be a bearish setup. Okay, so we will see how the market reacts. If the market will go down to 50% and then rebound, then maybe we are a little bit premature in calling for the market top. Okay, so there is a possibility the market may have a really top out at 4,133.13 on Tuesday. So going forward, I think I would have to accept want to adopt a more bearish bias towards the equity markets in the States. So basically, I am bearish. It all depends on what the market do tonight. Okay, the market is open tonight in the States. Let's see whether the market will try to go up, because on Thursday itself, the market attempt to rebound. And the rebound now is back to 50% of the entire top from 4,133 to the bottom at 4,069. So we have a 50% rebound. Internally speaking, now when we look at the 1 hour time frame, we can see that rebound here very, very clearly, okay? So this is more or less a 50% rebound, right? So we want to see if the market can continue upwards or downwards. If the market can go higher, if it breaks 4,133, then of course the outside bar scenario is for a time being put aside, but we want to see how the market reacts if and when it actually challenges it. If it challenged the 4,133, go into 4,140, and then reverse one more time with another set of reversal pattern, I'm going to go in and sell. Okay, so basically I'm very bearish on the equity markets in the States. Okay, so this is my view for the day. So you can use it as a reference point in your own analysis. Thank you very much. My name is Daniel Ang, and I will see you again tomorrow with a new product analysis. Bye-bye for now. Thank you.